So welcome all. For those of you who joined after the last HE webinar from Namos, thank you for returning. I'm glad it couldn't have been that bad, but appreciate it. So this one is on enterprise performance management. There's going to be myself just doing a few introduction slides about why planning is so critical for HE in these uncertain times, trying to add certainty. And then I'm going to hand over to my colleagues who are going to go through some live demos. So I'm Rich Clayton. I'm Namos's higher education lead. So I've spent pretty much all of my professional career in higher education, holding a variety of roles. Most recently, I was at University of Birmingham as their head of application management. But I've seen the full gamut of systems, successes and sometimes otherwise, and certainly seen a number of business intelligence and management information systems that have all touted magic bullet solutions into the sector. But what we'll be showing you today, I think, is something that certainly will add value. I'll hand over to Scott. If you want to introduce yourself.
Yeah, I am Scott. I'm one of the EPM consultants here, dealing with universities, public sector, all sorts of varied clients. Come from a background of working in local government, various roles there, through finance through to systems. So I'm aware of the implications of slash budgets and all sorts of things like that, and using the tool to well, deal with that problem.
And Ed, if you want to introduce yourself.
Hi, I'm Ed Graham. I'm the senior EPM consultant at Namos, and we have implemented EPM solutions at a couple of universities, Staffordshire University and Worcester University.
All right,
Thanks, Richard.
So a little bit about Namos. So as a company, although we were only founded in 2012, we are an award-winning Oracle Platinum partner. In fact, we're the only partner on their new modernized program, I believe, in the UK. And pretty much all we do is Oracle. It is our bread and butter. We are experts in the field. Most of us are certified at various levels. And some of us are thought leaders in our various business areas as well. We are a company driven on passion, and it is that passion for delivering to our clients, all UK as well. And really that passion all stems from our company motto there. So big enough to deliver and small enough to care. So those values of professionalism, expertise and trust, that really resonates with everything we do. That professionalism to clients, whether they be clients delivering a full raft of ERP, HCM, EPM tools, to for a project that would span a year or so, to the client who is just wanting a day's consultancy. The respect that we have for our customers is regardless of the scale of them. Everyone has their business drivers, and we recognize that we care about delivering those drivers to customers. In terms of this session, so really we wanted to put it on because we recognize that in terms of student planning and staff and budget planning for universities, there's never been a more tumultuous time. If we look at just student planning for a moment, what was certainly even just before I joined the sector, it was a nice steady sector. In terms of planning, yes, there was a lot of work to plan each academic cycle. There wasn't the raft of variants and left field things coming. And I just did a quick timeline looking, and from those early Schwartz principles about how admissions should run, and okay, there was a little bit of changes around adjustments of students being able to change their choice after acceptance onto a course. But I honestly can't see much in the span of those 5 years or 7 years really between 2004 to 2012, and then from 2012 it is like the rule book got ripped up and everything started to change. So from tuition fees rising, from caps being increased and then removed altogether, the uncertain times now may mean that they have to get it reintroduced. Those are things that the legislators and government changed for us, but then there was just things that we couldn't control. So decline of the 18-year-old population and what that meant for trying to attract a smaller pool of students. And with that, we tried to make the sector tried to make things more efficient. We paid plus admissions and all manner of data solutions, business intelligence solutions to varying success. And we're still kind of riding that way back. What we'll be showing today is how some of the tooling has matured to meet those needs. And you guys have changes, unconditional offers. We all know, anyone in HE would know the background to these things. Which kind of brings us to where we are now, which is completely uncertain times with admissions. Certainly, we will expect a drop in international students. We will almost certainly see more students who would have otherwise gone into a vocational, into a job or a vocational course, perhaps hiding in HE for a time whilst there's uncertainty in job markets. But there's no crystal ball here. What we know, the only thing we know for certain is that universities, there is competitive advantage to be gained on who can best predict and adapt to this changing landscape. And that's just on the student side, on the admission side. I won't dwell too long on here, but financially wise, the economic picture, the number of dimensions, if you like, talking in business intelligence terms, but the number of factors which are affecting HE budgets is only increasing. And what was touted as the fees, increasing fees, fixing all ills, is certainly not transpired. The only other thing on this slide that all slides were distributed, but the only other thing on this slide I've just highlighted is COVID-19. Again, just the unknown impact of what that might mean, what it might mean for planning cycles, what it might mean for students who will be making late choices on things because of uncertainty, international students who just might not be able to arrive, delays in the academic year. These are all things that there are worried planning departments at universities desperately trying to work through. And hopefully what we'll demo today is some of the tooling that we certainly feel could be a benefit to those planning departments. So what we got our heads together and said, okay, well, what are the must-haves? What if there was a tool, it could never be a magic bullet, but what are the things that must be present in such a tool, or such a solution rather? And really it's these the main themes of these 4 points. So any solution needs to be insightful, so powerful adaptable model that can understand all of those HE moving parts as we outlined in those earlier slides. Configurable and intuitive, so IT departments at universities are managing massive estates of systems, and priorities may well be elsewhere, whether it's shoring up student record systems, introducing CRM systems. Any solution must be one that power users, the subject matter experts, can use and really gain value from. And future-proof, in order to build these kind of models and the business criticality once they're in, it can't be something that has to change every year. It can't be something that gets de-supported. And that's where you see the benefits of a solution based on a tooling from Oracle, where there's a multi-billion-pound supplier behind it, ensuring that really is a future-proof system that you can get the return on that investment. And finally, easy implementation. Not only because of IT teams being stretched, but also because of time to market, giving competitive advantage. So being able to identify your requirements in UKHEs and have that quickly turned around into a working solution, there's never been a more important time. And so you'll be glad to know that that's it from me. I'm now going to hand over to Ed, who's going to start talking through a potential student number planning solution. So Ed, if I just hand the presenting role to you.
Okay, thanks, Richard. And please, everyone, feel free to jump in with questions as you think of them.
Ed, I'm just making you presenter now. You should be able to share your screen.
Okay, can everyone see that?
Yep.
Yep.
Okay, so what we're here today is to talk about Oracle EPM Cloud. It is the best-in-class solution for analytics, shown by it having the largest customer base. The product itself is subject to monthly updates, which it drives lots of good new features. And out of the EPM Cloud suite, Oracle EPM Planning, which we're showing today, is the most popular product. It is totally customizable and flexible for your needs. It has a fast time to value, whereas it's the models are easy to build, and it also has complex functionality, so you can get into a lot more detail than we're going to get in today. It also has native integration with Oracle ERP Cloud, and pretty easy integration with any system. If we dive into the demo, so basically what we wanted to show today was a student number model, and we wanted to show the flexibility of Oracle EPM Cloud, and also the some of the functionality that can be built. And obviously, if we build this solution with your data, we can use we can have more insights, and the more data we have, the more insights we will develop. And it's easy to model additional trends with additional dimensions, and with those dimensions you can apply predictive planning if you've got enough history data, and let the system crunch the numbers. Okay, so if we go into our student number model, which is easy navigation, so we use these the latest UI and the latest card-based navigation to navigate through the system. Clicking on student numbers takes us to our model, and you've also got the ability to navigate through the system using these cards at any stage. So what's really good about Oracle EPM Cloud is the ability to create nice looking dashboards, and these are interactive dashboards, so you can select different versions, the worst case version and a best case version. And these are totally customizable. Oracle deliver certain dashboards out the box for their standard modules, and easy to build on these. We also have a so what this dashboard is basically showing us is our student targets, the actual students we got in, and a comparison of the results to the targets, both with student numbers and student income. We also have a what if comparison dashboard, which basically shows the comparison between the different versions we've got. So what we've got is a working version, and we've also modeled a a best case and a worst case. Okay, so how did we build this model? We built in some assumptions. So in this vertical tab here, which gives us easy navigation, you can see we're built in course targets. So at the moment, our model is looking at course targets, and we've configured certain assumptions for a worst case and a best case. We can easily change this targets. If we save that, save the target, and then we can run a business rule, which will calculate our best and worst targets. And you don't just have to have best and worst, you can have different versions for all types of different scenarios that you want to model. But in our scenario, we see that I changed this 5% up on student numbers for best case, 5% down for a worst case. You can also model entry requirements. So using the UCAT points, you can add in different entry requirements for your standard entry and for your contextualized entry. And you can do this by different scenarios. So you can have a budget scenario and a forecast scenario, and obviously you can do it by different years. If you've got lots of history data, you can model what uptake you'll get based on these UCAT points. We don't have that data, so we haven't modeled that, but it's just to show that you can put that in. What we have modeled is course revenue. So you've got different revenue by course, with your courses down the left-hand side, and different income per student for UK and international. And you can adjust these per course, and the model will automatically calculate the values. So that, if we have a look at the model that we built, we have built a model which has certain assumptions. So assumptions are the amount of applications we'll get, the amount of unconditional and conditional offers we'll hand out, the students that will choose to select their unconditional offers, select their firm offers, and put us down as an insurance choice. And then when it comes down to the results, we've got the pass percentages of our students or potential students, fail percentages, and also a clearing target that we want to have. And this automatically generates the numbers on the right hand side. So we've got a comparison to last year. We can have a comparison to actual. You can run all sorts of types of variance analysis. If we look at student numbers, we can see that here international clearing, we've had 352 students. If we change the clearing percentage, and update that, we'll see that clearing, the amount of students who come into clearing is increased. So we can model different clearing analysis. And we can look at this form in more detail. So what we've got in this form is by UK international student numbers, and also for student income. We've also got it by course. So if you can drill down the course, so you can do your individual planning at the lowest level, and then the EPM solution will collate it quickly or into the top level. I guess standard functionality in these forms As for any cell, you can add attachments or comments or history, and all this is built in as standard from Oracle. Any questions on the model that we've built? I'll throw it open to the floor. If there's no questions, you can send us questions afterwards, or email by email, or at the end. We'll have questions at the end as well.
That's
Okay,
great.
there's no, oh, sorry.
That's great. I'll pass over to Scott. And Scott, you should be presenter now and be able to share your screen.
Okay, hopefully everyone can see it. Let me just minimize GoToMeeting. Okay, so I'm going to walk through the employee modelling and the budget and forecasting models that we've produced for Worcester and Staffordshire University. One of the big costs to pretty much all universities and all big companies is employees. That's one of the key things that people kind of ask us to do quite a lot. And we then are asked to produce budget information and forecast information to realign budgets and forecasts as things change throughout the year. So I'll walk through the employment planning bit. So like Ed said, it's built around the new tile sets and the new navigation flows. And we start out with the key information at a cost center and an analysis code level. So the cost center would be, for example, a school. In this instance, I think this is business, and this is the default analysis. But if you have different projects for like research purposes, for example, you can align employees in there. It all depends how you want to structure your employee planning model. This is forecasting for period 2, so it'll be running on the academic calendar August to July. So it'll be starting from September. And how we usually create the forecast is once you move through the year, as you're starting to get your actual figures in, they are then loaded in from ERP or other systems into the closed period. So you're getting a better picture as you're near the outturn towards the end of the year. So what we've got here is a snapshot of mainly financial information, but a lot of HR information as well in terms of FTE and headcount, because that's a big driver for people to see how well they're doing against the headcount, how many FTEs they've got. But we've got things like salary in, we've got mileage allowance and travel and subsistence as researchers and other professors will move around and do briefings and talks, etc. Other benefits are things such as honorarium payments, it covers a wide range of things. A lot of universities have a few different schemes, such as car schemes. We wrap them all up as other benefits, but obviously we can separate them out if needs be. We have overtime in there. We bring in employee national insurance contributions, employers' national insurance contributions, sorry, and employers' pension contributions to obviously to calculate the full cost of the salary. We've got the FTE and the headcount. So the headcount is just the number of people, and FTE is based on the working hours and the FTE on that. We have some gauges, so we can set targets to say that actually we want to be pushing a bit more for our FTE with our headcount. And then we've got comparisons at the bottom. So we don't have any information for financial year 18, but you'll be able to compare across the board. So you can see salary costs, any mileage, overtime, etc. And then we've got an overtime breakdown. So in this model, we've got overtime pay and overtime pay at time and a half. So you be able to see that one as well. But again, with the dashboards, they're quite powerful. Whatever you kind of build your model around, you can bring the data in and put it into some sort of dashboard format like this. So we've got an admin side of it. So most places we're probably used to doing salary planning probably on an Excel spreadsheet. So what this does is it kind of takes a lot of the elements from Excel spreadsheets and pushes them into one tool that just needs to be updated once by one person, and it will reflect across the board for everybody. So it saves no more existing copies of old spreadsheets that people are using and all that type of stuff. So on this one, we've got our salary bands. So this is where you put in the grey bands in terms of your national pay scales and put in their annual rates. So you only need to do this once per year. Obviously, if you are inflating in the following year, you'd then change it for that particular year. And we do that by changing variables. So you would just change the variable for the financial year here to the next year, and then you could put them all in again. Then we've got an annual rate and an hourly rate. The hourly rate is automatically calculated. So if I changed the annual rate to 30 and ran the calculation, saved it, it would change the hourly rate. And that's so it can calculate the overtime rates. If anyone's paid at an hourly rate, like zero-based contracts, for example, which have become a bit more prevalent following this economic downturn we've had as part of the issues with COVID. But again, this can be scaled up, and other universities have had support staff bandings and academic bandings as well. So this only has 12 points on it, but you could have 112. We then move to the cost driver side of things for the employees. So this is where you put in national insurance levels for the percentages, the lower and upper earning limits. We have personal allowance, your higher rate tax, and the thresholds in there. That would be more for cash flow models, but we put it in anyway so we can kind of show that it can calculate the tax that you would pay. The national insurance, because you run from August to July, chances are the percentages may change in April. So as you can see here, hopefully that reflects it, that we've said actually in April it's going to go up, and the upper limit's going up and the lower earnings limit's going up, and not to that. And then at the very bottom, we've got standard working hours. This obviously varies between university as well. So standard's 37. And what this does, this is used to calculate the FTE of a person based on the working hours that they're given in the form that you'll see shortly. So again, just needs to be updated once by one person, and it will reflect across the entire model. Again, same with pension scheme drivers. Again, we do it by month because we want to be able to change it on the fly, given that the academic and the financial calendar are slightly different. So in this model, we've got local government pension scheme and the USS pension scheme. And we've got obviously the thresholds that they have and their percentage amounts based on those. And then we've got the pension contributions from employers and employees, so we can calculate the further salary costs, the sort of on costs, as it were. Again, we can scale this up. So if you have 4 pension schemes, we can have the 4 different pension schemes in. So things like Nest, any other like local ones that you might have, we can add them in as well. And then lastly, on the admin side of things, we've got mileage drivers. So again, just the cost of a mile for cars and vans as they go over 10,000 or under 10,000, motorbikes over, bicycles under, and then the thresholds as well. So again, pretty simple. If things change in April, you can change it in here and it will reflect across the entire model. Again, if there's other things, for example, electric cars, there might be a new mileage, we can add that in as well. And all of these are prerequisites for producing the model if you don't have this data in, it can't produce and run the calculations appropriately. So we now move to the what we call the workforce model. And here we have the employee data for just one cost center and its analysis. So we have grade and band, or grade and point, which is a drop-down box. So a lot of places will pull this information in from the HR system. We can do that. We can do that through data integration to kind of make it nice and easy for everyone. And we can replicate the terminology to refer back more to the HR system. So these are all drop downs. So we've got grade and band, which obviously drives from the salary band here. So we know that the head of service will be getting that pay. We then have different employee types to drive the chart of accounts costings at a later date and the pension contributions and how they're dealt with in different aspects of the model. Pay type, annual, hourly. Most people will be annual, but then there'll be hourly staff as well. If they're in a pension scheme or not. So if they're not in a pension scheme, it won't create any pension contributions or any employer pension costs, sorry. But the pension schemes will refer back to what we've got in the admin window. Working hours here, so this is required in order to work out the FTE, and then the FTE will drive we'll work out the salary for that person. The mileage type that they're after, and so you can select either or, and how many miles that they're going to do in the entire year. We also introduce end dates. So if Jean Gray in this example is retiring at the end of February, we can add in the end date, which will ultimately remove all of her information after February. So it doesn't take into account that she's working the entire year. It goes, yeah, she's retired. We don't need to calculate anymore for her. And we could add notes in there as well. So usually this is pulled from the HR system and is usually locked down as read-only. And then any amendments are done in additional forms. But just kind of showing you. And once you are happy with this individual, so you could roll it out to budget managers, for example, and they could run with this and make the tweaks or load the data in. And then they can, once they're happy with it, they can hit save, which will run a calculation which will push it to the next part of the model. So this is where we can amend employee data. So on the employee data side, it's only set at one period from the amend employee data. This then splits it out into the full year, so you can see it from period 1 to period 12 or across the quarters. So for example, grade band, we can introduce incremental progression, which you guys will have as part of the national pay scales, but also this will allow budget managers to push those people above the band. So where they are capped, they can be pushed beyond that cap and it can be reflected in here. So let's just take Remy, for example. And we know in quarter 4 he's going to go up because he's got a new job and he's going to become grade 8.8. And we can drag that over there. And as part of his new job, his working hours stay the same, but he will get a tiny bit of overtime. So I'll reflect that in the next form. So once we've made that change, we can hit save and it will push it all through. So you can pretty much change anything in here. If you have someone who goes down to an hourly contract, for example, you can change that. You can change them in a pension scheme if someone moves from academic to a support role, for example. You can change working hours if someone goes off on maternity leave and you need to drop the hours. all sorts of different things. Your full year mileage calculation is slightly wrong, you can tweak that as well. And again, you can do that for any combination of codes. The next tab now allows you to add in additional benefits, any overtime. So what we'll do here is we'll say that actually, because Remy got a new job, there was a signing on fee of 5,000, sorry, 500, and we're happy with that. So we would then save it and it would push it to the next side of things. Again, you can add in overtime hours, so if you know someone's going to be doing a bit more overtime, you can add that in. If you've got time and a half as well, again, we could, if you've got 4 different overtime schemes, we can add them in as well. It's pretty much very well, it's from, you build it from the bottom up, so you can kind of build whatever you desire really. So the next tab is new hires. So we spoke about Jean Grey, who was retiring in Feb. We can bring someone in to replace her, and we can give that person all the same information, grade, band, but we have a start date now instead of an end date, and notes again. So new starter from March is a comment. Great, and we're happy with that. Again, we've only got 2 in this model, but you could have 40. And in other areas, what we can do is once we know who the new hire is, we can then merge this information with that new person using a calculation rule. We don't have it on this model, but it's something that we can build. So again, like with everything on here, we go through, we make the changes, and then we hit save, and that pushes it to the next part. And the next part is grouped employees. So in this example, we have lab technicians, because this is a research cost center and they are picking up a new research project, and as such need to calculate calculate the cost of hiring an additional 5 lab technicians. Same as before, there isn't a start date in here because it's really more for the full year picture, and because they're going to be so, for example, cleaners is the main use of this in previous models that we've built, and obviously cleaners there's a large turnover of cleaners because a lot of people will be probably students or local school children and college people trying to build their money up. So we don't have a start in here, but we do have a number of employees, which obviously scales it up based on the working hours and the grade band that they pick. Again, you can pick the grade band you want, the employee type, if they're in pension scheme, if they're going to do any like miles, etc. And then once we are happy, again, we click save. And this moves us to the review calculated pay form. So this is where you see everyone and their calculated salary, calculated mileage, any other benefits, any overtime, national insurance contributions from employers and the pension contribution for employers. Works out their FTE, gives them a head count, and then we have it all aggregating up at the bottom. So what we're saying here is, in this entire cost center, with our new hire coming in to replace Jean Grey when she leaves, and the 5 lab technicians that we're going to hire for our new research project, means our salary bill is going to be just under $500,000. But then we're taking into account our mileage, our other benefits, and our overtime, and then our additional on costs here. So it's at this form, usually you would go through and just check to make sure that you're happy with how things have panned out. If you look at an employee and think, oh, that looks wrong, you can drill into it and then go back to the relevant form up here and make the changes. So, for example, you've accidentally said that Jean Grey is going to retire in Feb, but she comes back and says, actually, no, it's March. You can go all the way back to the review form, make the change in there, and then follow the process through again. or if you're just wanting to make small changes on the fly, you can change them in this form as well. But we really recommend going back and using this model, because if you make the changes in here, such as changing the salary, it can have implications when you try and tally it all back again. And once we've ran through that and we're happy with the costs, and we're happy that that's what we want to see impacting our chart of accounts, we can calculate it to the chart of accounts, which runs nice and quick, and then we can aggregate. So aggregating in planning is just summing up. Some of the later cubes, like hybrid cubes, will automatically sum things up for you, but the earlier cubes, only certain dimensions will aggregate naturally, such as period and account. So in this, because we've added in employees and posts, we have to aggregate those as well. So we aggregate at that level, which runs nice and quick, and then we're ready to look at it at the salary level. So we can now see the employee, the post, and their impact on the chart of accounts. So, for example, if Jean Gray had 2 posts, assistant head, and she was assistant head of a different department, we would be able to reflect that in here as well. Or if she's in a different cost centre, you wouldn't see those costs in here, you'd see in the other cost centre. So it's the security aligned to it. But as I said, she's retiring Feb, so it's not showing you anything in Q3 because she's gone. And we've got your gross pay, national insurance, pension, if you've got mileage, if you've got any other expenses. And we've then got it at the bottom for the new hires as well. So the new hires taking over from Jean Gray in March. So it's showing you all the information in here. And then you've got your lab technicians and the gross pay here as well. And then you've got your subtotals at the bottom. So the subtotal here is that just shy of 600K. We're happy with that. So what we do next is we push it into the finance cube. So we just save it and it pushes it into the finance cube. But if we go back to a dashboard on here, you can see that there's the salary, employers, NI, etc. So it all ties back. And now that we've pushed it into the finance cube, we can go to the budget and forecasting, which is built around the finance cube. So this is quite a basic model. A lot of places haven't really started to push boundaries yet of being able to budget and forecast on multiple different levels, other than the employee side. But we like to introduce inflation percentages in here. So we've got inflation percentages here. So electricity is 50%. I put those numbers in because you can see clearly that straight away that, yeah, it's been inflated. So you can do that for all the accounts. If you wanted, you could do it for different entities. So if you know that the gas rate for one building that is going up, but the other gas is going up slightly less, you can separate out that way. Again, it all depends how you want to build the model. But the main part is this budget and forecasting form. So the top bit is grayed out because it's come from the employee side. And you'll see those figures should tie back. And that should give you 600K. Again, it splits it out by cost center and everything. And we have it grayed out in here, so it can't be changed. The only way that you could change it is by changing the employee model and then pushing it to the finance cube. And then lower down, we end up with different drivers. So this is a list which has calculations tied to the back of it. Hang on, let me just, there we go. And you can see we've got different types of drivers. So your total spend, using last year's budget, last year's forecast, the run rate, the period, last period actuals, last quarter actuals, and then the same but with different rates of inflation applied. So once we're happy with them, we can add that information in. So the year total spend, we can add in a target figure because we want to say we want to match that figure. And the next one is we want to do the same on 11,000 but with inflation, which was 50% because it's electricity. So when we run that, it's already ran, but I'll run the rule again. You can see here that actually, yeah, it has inflated it by 50%. Last year's forecast, so once you finished with the last year's data and you move to the new forecast, a lot of places like to mirror budget, like to use last year's forecast, last year's budget as effectively the first few forecasts so they can get a bit more in line with it, and you can select them. So last year's forecast for this particular combination turned out to be 22,000, so it's separated them out. And again, the run rate as well is working it out based on their information that they've got. But again, with the budget drivers, we can add in as many or as little as you like. It's very customizable. If you can do it in Excel, you can do it in planning, no problem whatsoever. And then from a bit further down, you can see the income section here. We can pull that income section from the student numbers into this model as well and have that read only. So the only way you can change those is changing the student numbers as well. And what we can do as well from this information and the employee information is we can create reports. There aren't any reports in this demo, but we can create reports on school or business units. We can do it for the full structure as well. So it's very, very flexible and ultimately becomes one of the main tools for reporting out your figures, especially when you start pulling information back in from your ERP systems, such as your actuals, and then pushing your budgets from planning back into ERP. You end up with a really, really good picture. So that's about it from my side of things with the budget and forecasting and employee planning. Again, I'll reiterate, it's pretty much a sandbox. You can kind of build whatever you want within reason. The more complex that it'll be, the more complex calculations that you'll have to have in the system. So we kind of steer away from going too complex because we want end users to be able to run with it as well and kind of understand the system inside and out. But yeah, it's a fantastic tool, and it seems to delight quite a lot of our customers as well, and we can turn it around quite quick so that we can see a lot of return on investment, because it's quite a quick tool to get working and up and running. So yeah, that's my bit. So if anyone has any questions, just shout up, or if not, you can email them at the end.
Thank you ever so much, Scott. It's fantastic.
I'm just gonna have to go and let my dog out. She's barking.
No worries. Guys, I've not seen any messages on the comments, so it looks like we're going to give you 7 minutes back of your day. So thank you ever so much. We'll post this up on YouTube so you can see the video. And yeah, thank you for spending your lunchtime with us. Thanks all.